All right, now you know when to buy and when to sell. Let's go over how to buy a call on Webull. So in order to trade options, you first need to buy a call option. There will be options to buy a put, sell a put, and sell a call. Don't worry about any of those other options. We are just going to be buying a call. That is how you enter the trade, is by buying a call. Now let's talk about what contracts to buy. You may want to write this down. The type of contract that you're going to buy for this strategy is a call option. The strike price is going to be the target price. So let's say that SPY is currently at 500 and you believe it's going to 505. Maybe that's the next resistance zone, or that's the daily range for the day. However you've determined it, that would be your strike price. You can do your strike price as far out as your target price. So you could do a 505 call on SPY. At the money is going to be the best way to go. It's just more expensive. So if you can afford an at the money strike price, go ahead and do that. But if you cannot afford an at the money strike price, then go ahead and get a strike price that represents the target price, which is where you believe price is going. At the money means if SPY is currently at $500 in the stock market, then you would get a $500 strike price. That would be at the money. And the expiration date. I recommend all beginners start with a 2-week out or further expiration date, even though this is a day trading strategy. The further you go out, the more likely you are to make money on the contract, the more intrinsic value you have on the contract, and the less you get ate up by theta. All of those things I go over in Market Money University. We don't have time to go over them in this mini course, but just trust me when I tell you that even if you do get the hang of it and you're always closing out your trades within the day and you're making profit within the day, there's going to be a day or two where you get caught up and you may need to hold for a couple extra days, and you're going to be happy that you had that 2 weeks out or further expiration date on that contract. So the 2 weeks out contracts are a little bit more expensive, especially if you're going to go with the at the money option. But I find that if you go with the target price option for the strike price, the 2 week out further is not that big of a difference.